Morning, everyone, and afternoon to those in India. I hope you can all hear us. I'd like to welcome everyone to this Bridge India webinar, which is part of the COVID-19 series. Follows a very interesting webinar we had last Friday on housing. By way of introduction, my name is Chirag Rao. I am a Bridge India ambassador and a member since it was formed. I'm also a real estate lawyer and co-head the India group at Howard Kennedy, which is a London-based law firm. Some house rules. Everyone other than the host, Bridge India, and the speakers are requested to be on mute with their videos off. We may have some technical issues. And so just in case I drop out, then I'll ask Pratik to pick up. And just in case any of the speakers drop out or the panelists drop out, then I'll ask one of the other panelists to step in until that person's internet is working. So in terms of format, we'll have about 45 to 50 minutes of a discussion with the panelists. And then that'll leave about 15 to 20 minutes at the end of audience questions. I will ask that each of you, if you do have questions, please send them to Pratik at Bridge India, and he will be able to filter those to me. We're not operating Chatham House rules, so we are recording this session. It is also on Facebook Live, and I'm told that a copy of the recording will be available after. For those of you who don't know much about Bridge India is a progressive non-profit think tank whose main purposes are to increase public policy discourse relating to India, widening the lens through which India's story is presented sometimes abroad, and to help India watchers all over the world understand the country better. And the way that this is achieved is through debate, research, and webinars. Debate being one of the ones we're having today. Before I bring in our very esteemed panel today, I'd like to set the scene. India's startup ecosystem has scaled to become the third largest hub in the world. 2019 was a milestone year for the Indian venture capital industry, with nearly $10 billion in capital deployed. And while startups have mushroomed across sectors, it is consumer tech, software, SaaS, B2B, edtech, fintech, health tech that have really been the emerging verticals, whilst e-commerce and aggregators have become more mature. A lot of these startups have been offering something unique, problem-solving solutions, and then they're doing something really path-breaking. And all have been important engines for growth and for job generation. Three key trends that stood out in 2019, backing repeat and seasoned entrepreneurs, strong deal flow at early stages, seed and pre-series A, and deeper internet penetration in tier 2 and 3 cities, which really opened up the market to monetizable opportunities. The boom in the startups have been really due to a combination of factors, a consumer-driven economy, which is meant a really large consumer base, a growing digital economy, and a high-quality tech talent. And all these are indications of a maturing of a nascent Indian ecosystem that is really inspiring investor confidence globally. As a lawyer, I have to talk quickly about the government and regulatory landscape, and no doubt Vatsal will be talking about this. We are seeing some really flagship startup policies at a national and local level. And this is coupled with some of the most recent announcements like the tightening of FDI and also the government's announcement recently of an e-retail chain for rural India. However, unfortunately, due to COVID-19, we have seen a significant slowdown in deals activities. Certain sectors will suffer more than others. It's safe to say that travel, hospitality, retail, and some other consumer-facing businesses will unfortunately be adversely affected, whilst there is probably quite an opportunity for other sectors like analytics, AI, health tech, ed tech, online grocery, which are already booming. There is an argument that India's startups are notoriously valuation-driven, and the pandemic has exposed this overvalued nature of many of these startups. And the question on everyone's mind is, will this boom be impacted by this global pandemic? And more importantly, does the corona spell the end of India's valuation-driven startup boom? I'd like to now introduce the panelists I have today. Firstly, Dr. A Didar Singh. Dr. A Didar Singh is a very highly experienced civil servant and former Secretary General of FICCI, with a demonstrated history of working with both government and industry. He's a doctor of philosophy, focused on e-commerce, and is an expert in migration and diaspora studies. He's a political analyst, mentor, and now an advisor to Bridge India. We then have Vatsal Gaur, who is a fellow lawyer. Vatsal is an associate partner at HSA Advocates and specializes in venture capital, angel funding, and corporate work. His work includes advising startups across various sectors, such as fintech, edtech, agri-tech, on their pre-VC rounds. And he's also advised growth stage and PE-backed companies as well. We have an entrepreneur amongst us, Rashid Bin Abdulla. Rashid is the co-founder and director of Gen Robotics Innovations, a social enterprise which specializes in the design and development of robotic solutions designed to address really pressing social issues. So, for example, Bandicoot, which is the world's first robotic scavenger inspired by Iron Man. And Rashid's journey to entrepreneurial life began from college, and he was recently awarded the Young Changemaker Award for Bandicoot. Finally, we have Arbinder Chatwal. Arbinder is a partner at BDO and heads up the firm's India Advisory Group. He has more than 18 years of experience advising clients on audit and all aspects of doing business in India, and help them really in designing their India entry and growth strategy. He works very closely to strengthening bilateral business exchange between India and the UK. And he's been successful leading the London Mayor's International Business Programme to India since 2014, working very closely with the GLA, London Partners, and the Department for International Trade. So a real privilege to have all these panelists with us. One of our panelists, unfortunately, was meant to be with us and due to some power cuts in Pune, has not been able to attend. But if he can attend halfway through, it'll be really good to have him as well, because he's a real expert in edtech. So starting with you, Dr. Singh, I'd like to really get a macro perspective from you on the size and nature of the startup ecosystem in India to date, and how you think that the pandemic will really unfortunately affect this ecosystem for the positive and adversely as well.
Okay, 5 minutes is what I have, and 5 minutes is what I'm going to give you. 3-4 key issues that I want you to understand. And the macro perspective, I don't want to limit it only to startups. I want to go beyond that, because I think it's the entire economy, both globally and in India, which is impacted. So you need to understand that. Number one, world GDP 2 years ago was $85 trillion, growing at 4.5%. That whole thing has come sliding down in this, what is referred to as this great lockdown, which is happening around the world. And they're talking now of possibly even a negative GDP, and they're talking about India being at 1.9%, or some people are saying even 0% in terms of its growth situation. The overall startup industry is very large. We have some 50,000 startups in India. It's in several $1 billion. Last year itself, 2019, there was a talk of raising some almost 15 billion, $14.5 billion was raised, and about 2 lakh new jobs got created. And as you correctly pointed out, it's third behind China and the US. Now, there's something about this COVID and this lockdown that we must first understand and flag right here. The first important point is this is a lockdown and this is a recession that has not been brought about by market forces. It's a recession which has come about because of a lockdown imposed by government to protect the health of people. In other words, if you look at the whole compact that we have signed with all our governments, and that's how the whole social system works, it basically means that government's responsibility is very high in addressing these issues of the lockdown. And therefore, you see across the world a very large number of aid packages being announced. India itself has presently announced some 1.7 trillion rupees, and we're expecting a second one to come in the next couple of days. And you have people like Arvind Subramaniam who are talking in terms of a 10 lakh crore support package, which is necessary to get us out of this. Basically, the point is that it's a man-created lockdown, it's a man-created recession, and therefore We hope that once the lockdown gets removed, that there'll be a V-shaped recovery. We don't know, but that's the presumption. Or many people are talking in terms of a U-shape, which could be taking a lot, sort of bottoming out, taking a long time to recover. But having said that, let me just mention a few very important things of the global world situation that we have to understand. Because we're talking about business models, both for startups as well as for all corporate world. This business model, as we all know, began to change in the last couple of years. What was this main business model? This business model was based on research and development, it was based on value addition, it was based on marketing. Research and development began to change. It began to become search and development from research and development. You all understand what that means. It means that you would now either acquire or phase out work for research to other companies, smaller companies, and gain from that and learn from that, and then use it for your own major company. Now, this change in the business model is something which was already happening. COVID has only heightened this or made it even stronger and quickly impacting everybody. In terms of finance, which of course all of us have to understand that ultimately this model that you're talking about with basically finance-driven model is going to change. Yes, it can possibly change, but at the end of the day, for the global economy, I do not think that finance is going to be a major problem. Why do I say that? Because you have sovereign funds, wealth funds, pension funds, they have to invest somewhere. Money has to go somewhere, and it will go. Even in India, we're expecting a lot of it to happen. So basically, what am I trying to say? I'm trying to say that the business model and the revenue models and the models of startups are not going to actually change very drastically, even post-COVID. But yes, there will be three phases of it: the lockdown phase, the graded opening up phase, and finally the vaccine phase, which mainly may make us through in terms of being able to go back to normal life. And that is the macro perspective I want to share with you, basically saying that this model that we've talked about in India is not just particular to India, it's happening in the US, it's happening in UK, it's happening in Europe, it's happening in Israel, and we therefore must be ready to bounce back once this whole situation improves. And that's 5 minutes. Thank you very much.
Thank you. I'm sure I'll come back to you. Thank you so much. That's very insightful. Vatsal, I want to come to you, and I just want to talk to you about the current legislative and regulatory framework and whether you believe that it's conducive to helping startups flourish, and your views really on the recent tightening by the government on FDI, which effectively requires investment from any country that shares a land border with India to go through a government approval process. And I think everyone knows who the target of that new rule was. So it'll be good to get your perspective generally on the regulatory framework and on this particular tightening by the government.
Sure. Thank you, Chirag, and thank you, Dr. Didar Singh, for your inputs. You asked me two things. The first is, in terms of regulatory frameworks which enables in the startup ecosystem, we do have a fabled Startup India scheme, which to some extent has been successful. Specifically during this time of the pandemic, there was a fund allocated to SIDBI, out of which about only 1,000 crores has actually been allocated. As we speak, I think just today there was a letter which was been sent to the department and to the minister asking for some dispensations, including exemptions from this recent FDI change by a startup association, which includes folks from Make My Trip, it includes folks from Venture Gurukul and a few other agencies. One of the representations they've actually made is exemptions from this recent change in FDI. More specifically, what we are seeing is, if you look at some of the larger startups, which are at least in the tech ecosystem in India, more than 60 to 70% of them have Chinese investors. So the implication that's arising as a second order implication is that existing VCs who already are on the cap table of these companies are looking to do a follow-on round or just to inject liquidity to ensure there's runway. The challenge is, how do you make that happen now? The other implication that arises is that you might have a fund which is invested in a portfolio in India, although doesn't have any Chinese domicile, but could have LPs who were of Chinese origin. The third option is that there could be a potential IHC or an SPV structure which is routing money through a more favorable tax jurisdiction. It could be Mauritius, Cayman Islands, it could be BVI, which are typically used for intermediate holding structures. Even there, any money that's routing through those structures could technically come under the vigil of this approval. What we are seeing, however, is that this is actually a move which the government has done as a protective measure. So I can't speak on the virez of it. I can speak on what's changing as a result of it. So I think the larger picture is more around small early stage deals. I believe will get tougher, and ticket sizes will become smaller. And what we're also seeing is that at least with existing companies who already have a proof, who have proof of business, who've running turnovers of over 200 crores, companies like these will continue, and they are getting runway from their existing VC players. But newer and also I think especially late stage startups will also not have too much difficulty. Yes, there are some sector disruptions, which are absolutely true, and those sector disruptions are affecting certain sectors. Recent announcement of Facebook Geo is another disruptor to certain sectors. So I think we'll probably touch upon all of these themes. But to answer your question on the Chinese FDI, like I said, there are a few questions which are unanswered. Some of them I've shared here. Some of them I've actually opined on some media news, which is already in the market. So people can always see my views there. Having said that, I think there is going to be a narrowing down of the time frame for the government approval. I don't see how some people are bloating this up as a big issue. And it would also be good to consider the larger macro picture as to why this policy change has been made. So the government has to do a bit of a balancing role, and I think it's doing that in a good way. And on the startup scheme and regulatory framework, I feel, especially during this time, that there could be certain dispensations, like has been extended to the SME sector for moratoriums on loan repayments. If something similar could be done for early repayment of GST returns, for example, there are some representations which have been made by policy think tanks in India around this. So we are hoping for some more clarity as we proceed, especially as we come to know clearly on May 3rd if this extension is going to increase further or not. Thanks.
And just a quick follow-up. Do you think the government has acted quick enough in terms of regulation policy, or do you think that they could be quicker?
Look, we have to also keep the picture in India has always been reactive.
Yeah.
Lawmaking has never been proactive, and I think that's what people like Bridge India bring to the table. We're looking at getting policy framework as a proactive tool. We're hoping that situations like these, including webinars like these, will shape that curve. As of now, we have to also understand that startups, because that's the theme. If you really look at the numbers in terms of formal employment, even though the numbers are increasing, but overall only about 3% of the workforce is employed by the startups in India. You aggregate all 8 to 10,000 active startups, the total population of people who are in the active workforce employed by startups is still just 3%. So when the government has to make any dispensation, we have to also factor that. And the other thing I want to bring out is that as a country, the people that I represent or you represent, we represent not more than 70 million people, which is pretty much like Netherlands. I don't think India is different in that respect. The challenge is that you have a large elephant that has to be moved. So I think the government's focus has been more on measures which are essentially around just controlling healthcare situation, focusing more on the lending part, because there had been already so much financial stress in the system. But offshoots will happen. Valuations have become more rationalized. I'm seeing a lot of M&A that is commencing. We are running a lot of deals as a firm, getting so many new engagements from European investors, and actively work with other accounting audit firms like BDO actually in India. So happy to sort of see where collaborations will lie, and how this can actually help in the longer course. And I would love to maybe at some point of this series also talk about certain sectors which are actually booming right now and doing well.
Yeah,
So we can touch upon that.
Yeah. Hopefully we'll have time to discuss that. Definitely. Thank you so much, Vatsal. That's very insightful. Rashid, I want to bring you in as a successful entrepreneur and a founder of your own startup. I want to know on the ground, how has the pandemic affected your business? And do you believe that COVID-19 could actually accelerate the use of AI and help tech startups like yourself going forward?
Yeah, yeah, thank you, Shrak. So basically, if you're considering the pandemic situation, also there are a few things because as Didar said, as Dr. Didar said, like there are some sectors where the money will flow into their sector, and the money will not stick at one place. It will start flowing from one time. So basically, if we come to look at about our thing, so we basically developed a robot that is called a Bandicoot that is for cleaning these manholes. And we know that the sanitation sector, which is already exempted from the lockdown, and they have to work even in this situation as well. So for us right now also our business is moving on, and still we are receiving the orders from the government, because this is like in a primary sector where we can't say no, or where we can't, where we can't neglect anything. So this is one area that what we are saying, that there are keen robotics or AI which have a good focus throughout the world, not only particularly in India. It is like in a world situation that what we can say. And if we talk about this Indian ecosystem also, the government sector is also supporting all the startups very well. And that I can show my venture as the best example for that. And even we started with the fund from the government as a grant, that is an a Kerala startup mission. They're like a nodal agency of the government, state government. And from them we received the fund for developing a prototype. Then we developed the product with the help of the concerned authority, or we have been working with the sanitation department. Then we received from the support from them, and right now we are receiving the orders that's again from the government. So basically, if you're talking about a government entity or a business which is like in a B2G model, that is quite, a high focus, or like the opportunity for B2G model is quite high in India. And if it's like in a technology based, it is good actually. And the other part, what we can say, the investment also. If you are in ancient times in India, there is a thought like that the investors will not put any kind of money on the startups who are working on B2G. But right now the situation is also quite changed, and now we are also get funded by Unicorn Venture Capital and also by Rajan Anandan. So these people are also quite, focused on the investment basis. Also, they're quite focused on how where to put the money. So basically, I think they're also keen on the technology based startups, not the model where they are working on the B2C or B2B or B2G. Whether if they have any good market, a solid market over there, and if they have a solid revenue generation over there, it is the best option with all the investors and the government also supporting for that. And if you talk again on the pandemic situation, this is not we are also not just, belongs to one product or one particular robot. Rather, here right now also we are on the we are on building many other things. We are also supporting on the production of ventilators and other small stuff, other small mechanical devices that we are building for the sanitation workers and to support the health sector. So I think again in this pandemic situation also, there are quite a lot of funds funds available in different sectors, but especially right now it belongs to the health sector and for the welfare of the people.
Okay, and do you feel that funding will become more difficult as a result of this pandemic?
Yeah, actually, here as you have put on the agenda also, there are a few things that I would like to notice that. Here the investors are more focused. Not, I thought so because more on the valuation perspective somewhere. And if you talk about the pandemic situation, I feel that there is some sort of such situation is there. But for us, I think our investors already offered us the next round also. They said that as a follow-up round, or at this situation also, because in this pandemic situation, they're more happy to put more fund to our venture.
Okay. Um, Thank you so much. I'll definitely come back to you, Rashid.
Yeah.
Before I bring in Arbinder, I'd like to just get Dr. Singh's views on the recent FDI changes that I was just discussing with Vatsal. Dr. Singh, would you mind giving me some of your perspective on the recent FDI changes?
Yeah, I think it's been wrongly portrayed that we are trying to ban any investment from our neighbors. I think that's completely wrong. All it is saying is that the investment is still welcome, but it has to go through a certain process. And that process means a prior government approval before it's done. For example, if I want to invest in a media company, obviously there's going to be views on that matter. But if I want to invest in, whatever, in a taxi company or technology for power or whatever, there's going to be a different view which is going to be taken. It's the same as the earlier situation which already prevailed, that you had to go for all FDI to the investment board. Now, this is merely a replacement of that in terms of being a little bit more careful. And as you know yourself, these rules are already in place in the US, they're in place in UK, most of Europe, they're in place in Japan, they're in place in Israel. So we have to just follow the global position on this and not deem it as something which is, not to stop investment from a particular country or whatever else. I don't think that is the case at all. Thank you.
Thank you. Thanks so much. No doubt we can have a bit of a debate on this, but thank you for that. Arbinder, I'd like to get your perspective on what you've seen in the market generally and with Indian startups. And I'd like to also know, in your view, how do Indian startups differ from, say, British ones?
Sure. So thank you, Chirag, and thanks for giving me the last slot on this. After such great discussion so far from the panelists, and I'd just like to kind of outline from my perspective. I concur with Dr. Singh's thoughts there, in particular about the R&D and search and development. So I'd like to touch on that. I think that's all from your perspective on the some of the breaks that could be made available, such as GST, etc., and how that would help the ecosystem. I think that's really interesting, and again, that's something I wanted to touch on. And I think, Rashid, you highlight really well from a startup perspective of what they're seeing in the sense of that need for the funding and the appetite which we're seeing at the moment. So that's something which I'd like to pick up on as well. So, overall, my initial remarks, I would echo the comments which we've seen from the opening panelists, and I'll do my best not to use the word unprecedented again. So I think we're running a ticker to know how many times we use that word. And I think the Indian economy, to some extent, has, the startup scene has its own domestic challenges before the COVID crisis. So I think that's important to put in perspective. How to put some perspective on this overall, and I think as you outlined in your opening address, that India is the third largest startup ecosystem in the world, with over 50,000 total startups. So I think it's substantial in its nature, and it's how it evolves from this piece. Whilst Indian startups have bounced back from previous crises and crashes in a stronger position, my concern and my fear is that the coronavirus is bringing an unprecedented level of uncertainty. And it's the actual duration that's concerning me in terms of when we're going to come out of this lockdown. So I think you mentioned 3rd of May. Who knows? And I think as long as that kind of pushes out, that's what's kind of concerning me to the next level, really. India has and will continue to be an entrepreneurial market. There'll be more entrepreneurs coming out with bright ideas post this. And I think there's going to be even more startups and a wider gig economy, which will be larger than ever before post this. So that doesn't concern me. But they all will be, and this is to some extent what Rashid just touched on here as well, but they'll all be vying for limited capital in the market, which will have to be shared amongst existing VC funds, existing investments, and a lot more potential future investments coming in as well. So competition will be fierce, and I think this will have a negative impact on valuations in the short to medium term, to some extent maybe a correction in the marketplace. Those that have, so from my experience and what I'm seeing in terms of investments which have been made pre-COVID and in the limited time post-COVID, those that have secured their investments and fundraisers prior to this crisis will be in a very strong position with cash in the bank. However, what I'm seeing with investments is that even those which were agreed in principle, maybe days before the lockdown, have been delayed and in some cases withdrawn, which concerns me. And it'll be interesting to see how that develops in the forthcoming weeks as well. countries across the world face the new reality of a post-COVID, global economy. And those countries, if we look at any of the crises that we've had in the past, those crashes, those who've continued to invest in innovation, in R&D, on the other side will come out with an economic advantage, will allow it to accelerate. India's investment in innovation can be measured in terms of its GRED, so gross expenditure on R&D. And the fact is, it's always been lagging, before the COVID crisis. So India spends on average 0.7% of its GDP on R&D. This is well below some of the other major nations, the US at 2.8, China at 2.1, and Korea at 4.2. So my concern would be that after this, and with the cash crisis hitting it as well, from an R&D perspective and innovation, will investors, will businesses see R&D as discretionary spend? And if that is the case, I think it'll take a longer time and a lag when they come back on the other side. So I think, not seeing R&D as discretionary spend will be key for me in this. I would say the boom is certainly behind the Indian startup scene at the moment, but the space will have to be one to watch out for still. And I would echo, I think Vatsal kind of mentioned some of the sectors which are going to be, interesting. We're seeing some booms post that, and certainly anything tech related will be more valuable, as we're seeing with video streaming. Gaming is one which I'm fascinated with. I worked with a number of gaming companies in Bangalore as part of the Mayor's International Business Program in the last 4 years. And they've seen some real interesting growth during this lockdown, with where this is going. So I think there's going to be a number of these, including SaaS providers, biotech as well. So my glass is not half empty. It's just with being an accountant and an auditor, I have an element of caution. So that's my concern.
Just touching, Arbinder, you're an expert in the UK India corridor, and we've seen a number of startups, the likes of Ola and Oyo, who have now expanded to the UK. Do you see this is going to have a really major adverse impact on some of these startups looking to expand globally in the future?
I think it's taking a longer term view and a longer term assessment of it. At the moment, as we've mentioned, cash is so limited. So if I look at the statistics, so for the startups we've been speaking to, over 30% are looking at reduction in staff numbers in the next 2 quarters. In terms of sales revenues, etc. So it's all pushing pressure on cash, and I think from that perspective, it's gonna delay that phase most certainly. I think there's not much international expansion discussions happening with the startups that we're speaking to at the moment, and I think that's probably right at the moment, because it's about getting your domestic footing right first with where we are. Those who had medium-term aspirations of going international are still very much there, but like everything, like any forecast at the moment, it's on hold.
Okay. Hello. Thanks, Arbinder. Thank you. I want to ask the panelists, going back to the main question where we talked about valuation, and maybe bringing firstly Dr. Singh, do you think it's fair to call India's boom a valuation-driven one? And do you feel that perhaps COVID-19 will mean a real introspection and evaluation of business models to push towards profitability as opposed to just valuations?
You're absolutely right. The very term valuation-driven boom is a new term. It came about only in the last few years. It came about because this was a new business model, in the sense that you did not have earlier business models which were based on valuation as opposed to their actual performance in the market. So this was a new model, and this is something that we borrowed from the West. It's not something which happened in India. It's something which actually started in the Silicon Valley, where valuation was more important than your actual performance in the market. So that concept of a business model remains even now. And in my opinion, as you've heard me express it already, is that model is not going to change, because that model is something which, if you go step back and look at the fact that this COVID-19 is not impacting only the startup economy, it's impacting every part of the economy. So every part of the economy needs to bounce back along with the startup value-driven, whatever startup economy, that ecosystem which was coming in place and was actually in place. But just to give you a little bit, you heard Rashid already mention that he's of course in an essential service, so his work is still going on. There are lots of others who are in healthcare, who are in many aspects of providing essential services, which are very much there and not stopping at all during even this period. And then you have also, you know, the whole e-commerce and delivery services. You have the CSR work which is going on. So all of that is happening even while the pandemic is going on. So we do think that post the COVID situation, which you already heard me mention, it's going to be in 3 phases, but you're going to see a return also to the same valuation driven model, because that is the model which actually works.
Okay. Just before I get everyone else's views on valuation, I want to, because you're an expert, an e-commerce guru, I want to get your views on your what government opening up this e-retail, you know, for the rural areas. What your views are, and do you think that, you know, it's an ambitious plan and it's one that can work?
Absolutely, it has to work. It is an ambitious plan, but it has to work. And e-commerce in India has seen great successes. In fact, one of the major successes we've seen in the last few years is really the whole expansion of the e-commerce industry, and I don't think that's going to stop. It's yes, China had put a lot of barriers around it, but India did not. India had a particular model that's been working very well and will continue to work well. Yes, the regulatory aspects of it will always be there. You will have to go through a fair system and being equal to, you know, the physical retail stores, etc., etc. But rural areas, agriculture, that is really where the future lies. I totally agree with that.
Okay, thank you. Vatsal, your views on whether you know, it's fair to call it valuation driven, and you know, whether we need to have an evaluation on business models. And also I'd like to see, do you ever think that we will see our first IPO in respective startups at some point?
Well, look, in hindsight, we're all very intelligent. So I think that we tend to call things booms and busts because of hindsight knowledge. I think valuations have been driven by business cases. So I do tend to disagree with Mr. Didar Singh there politely, because I feel there have been justified valuations based on certain norms. Now, what's happened is globally indices have stopped performing, and a lot of private equity and venture capital is backed on those indices. A lot of LP interest therefore has been frozen. It's not that money is dried up. It's not that they don't believe in the Indian companies anymore. It's just that they are cashed out from the stock markets or wherever they're invested, and they're waiting and watching. That pool of capital will come back. I don't see valuations changing recently, and Byju's did raise a recent round.
Yeah.
There are existing you know, deals which were already on the table. The only reason we are seeing some correction will basically be around, you know, a focus more on actual fundamentals, where profitability will be one of the key sort of, you know, parameters. And yes, to some extent, startup listing has been a bit of a challenge. We've had, you know, I had commented on this some time back for Economic Times, where they had reached out and they was asking, why is it that we don't get exits in the market? One of the challenges is that, you know, overseas listing is still not very easy for India. If we can make certain changes around overseas listing, and we can work across countries, where folks like Arbinder and I could then potentially work together and get some of these startups liquidity, would be a great measure to think of. There is a startup exchange, like a listing platform for startups, but that has really, I think, just had one IPO so far, if I'm not mistaken.
Okay.
So that there is something in the framework, but it's not happened. You know, some of the reasons for that include, while we've adopted Silicon Valley term sheets and style since 2014, I think 2014 is where this really became popular. But, you know, some of the classification of shares, for example, differential voting right shares, which is a very normal structure, Facebook still has it.
Mm-hmm.
I think what's happened is that at the time of listing, there are the conditions which are precursors to listing are very, I would say, anti-promoter. Let's just say it that way. I'll just say it as true as it can. And therefore, to make it a little more friendly, if we can be more aware of market nuances in developed countries, then we can tend to go there. I think when we stop being a protectionist country and remove that dogma that comes with being enslaved for many, many centuries, we will have laws which are more proactive. And I feel that there could be laws which ease listing, because there will only be so many secondary market transactions. There is news now that will this pandemic witness the onslaught of secondary market funds? Will there be new fundraising that is going to go on for secondary buyouts? Well, that's always been an open possibility, but it's not that much, right? As far as, some of the larger controversial investments, you take SoftBank, for example. SoftBank still is going to back its late stage startups, just to give an example. So they still have, I think, promised about 13 billion further to deploy. Going back to valuations, I feel now there will be there is more selective focus on anything which is direct to consumer. So OTTs, gaming, edtech, and so. These setups and these kind of sectors will continue to be driven by the same valuation models, because there is no other way to assess a tech startup in the education space as distinguished from a fintech startup when demonetization happened. So we are also witnessing there will be a positive that will come out of this, and corrections are one. Yes, like I said, ticket sizes for the time being will be smaller. There'll be less appetite to feed the 100 million kind of deals, but you will still see enough of the $5 to $20 million deals. And we are already working on them. In fact, some of the our firm recently was part of the today's articles and newspapers cover it, all the business dailies, where we made some representations to the government for exemptions for startups. So I feel that if all the frameworks work together, there is going to be some corrections, but there's also going to be much more positive movement. One last thing that I'll touch upon is on valuations.
Yeah.
One thing that comes with correction of valuations is more M&A. If you saw the last year, there was a lot of M&A happening in the renewable energy sector. The reason for that is that valuations were flattening out. So you saw a lot of, buyers like the Brookfields of the world, and you saw a lot of buyers who were French-based, the EDFs of the world. They're all looking to acquire assets here. So I feel that also generates FDI, and it also generates employment. So it maintains employment. So frankly, yes, there will be a correction, but for every industry that's taking a beating, there will be certain new sectors which will emanate. On the point which Mr. Chatwal and I think Mr. Didar Singh also mentioned, which was around research and development, we are hoping that this period can be really used for upping our game on the competitiveness index, which India has always been a little low on. I think that's something we really need to push on. So hopefully we might start seeing the next R&D tech firms based in India. And that's the hope now.
Thanks, Vatsal. I mean, an important follow-up question actually from Bipin Patel from Bolton, and I'd ask everyone to keep raising their questions and sending them to Bridge India as they're filtered to me. So a question that Bipin has asked is, as COVID-19 has placed an importance on resilience of business, and how important is that element when looking at recovery and valuation? And that's something I'd like your views on, and certainly I'll be asking Arbinder and the other panelists as well.
Sure. I mean, one go-to guide I can refer to is this, and I can probably link it in the comment section. It's a Notion article which 10 to 12 VCs firms which are actively investing, Chirate, Sequoia, Axel, had put together. And one of the themes they talk about is resilience. One of the underlying themes I can recall is that I think 10 to 12 months is the amount of runway that funded startups are now being asked to work with. And if that means retrenchment, letting go of certain non-essential employees or departments, that's already happening. And yes, in some way, this could be then the black swan event that we needed to test resilience of some of these startups. So if in that process, certain, let's say, certain startups which are in the business of hospitality or travel tourism, which couldn't otherwise last the 9 yards, if they end up shutting down early, it could be a good move for the larger realm, because then you're focusing more on core business principles. to that extent, yes, and there's going to be a higher level of monitoring now on portfolios, which is already happening. At the same time, standout firms which are standing out in this time will really get benefits in the short term, or at least in the medium term.
Thank you. Thanks, Vatsal. Rashid, if I can bring you in, I'd like to obviously to talk about what has been discussed so far in terms of valuations, resilience, but also, historically, many seed round checks upwards of $1 million were always just paid on an idea. And how much do you think young entrepreneurs like yourself are going to have to really prove your business model going forward before a VC pumps in cash?
Yeah. So basically, I just want to say one thing. So basically, there are two types of startups working. Based on the founders. So basically, there are two types. One is that the persons or the founders who are more focused on valuation-based gaming, or the second team, they are more concerned about building a venture like a Infosys, like a Tata, so such a company. The others is like based on the valuation that they can create. So typically, if I'm saying the companies who are trying to build a big firm, a big venture, they will be more focused on the more focused on taking the capital or taking the investment from a private, not from not from a venture capitalist, rather than they will be taking the financial assistance from the government or the other companies. So as you said, there are other startups who are working like in a purely on the valuation perspective. They will be taking on that this much valuation, they will be raising from the other party, and Series A, Series B, it will go like that. So, and right now, if we check about the government, even the state government or central government, they have a lot of financial assistance to the startups. And for example, we are also utilizing that that there are provisions. So one is that there are provisions like from the state government itself. There are financial assistance to the startup for creating for the startups who are in the scale up stage. So we don't need to look after a private equity. So the problem is like if you are going for an investor or a investment, they will be more focused on the revenue generation part. So if it's like an early startup, the revenue generation will be very less. And there are few exceptional investors also there, and I can recommend our investor Unicorn. They also done the investment before we are launching the product. At that time we don't have the product also. We are just having a prototype which is created in a wooden structure. But there's some investors like, they are more focused on the technology or the enthusiasm of the founders, and they will put the money on that, and they will not check about the the valuation.
Okay.
But I'm just talking about the startup in between a phase where they just come up from the early stage but not reached to a company level, like in a corporate level. It is an in between stage. So in that stage, the startups may not take the valuation, may not take the investment if it's more into an evaluation perspective. So that's what I thought of. And here in India also, many startups are working like that. And I have many friends who are working. It is more like taking the financial assistance from the government entity. There are like here in Kerala itself, there are Kerala Financial Corporation. So they will give like 5 to 10 crores for the scale up. And after that also they have the provision to expand that corpus for the startups. So so even we also thought that it is better to take that fund rather than going for an evaluation perspective, because valuation perspective, the investors are more looking at the what we have created so far. They're not looking. Somewhere they are not concerned about what we will conquer in the future or in the next some quarters. So I thought there are. Both are there, and both type of startups are there, and it is happening. And in India also it will go like that. There are two models of startup will grow in parallel way.
Arbinder made a very useful point about R&D, and Rashid, I just want to know that in terms of R&D, do you think that that's going to impact you in any way in your business going forward?
Yeah, so actually, basically, for the early startups, and if I'm talking about the budding startups right now, they will gonna suffer a little bit because of this pandemic situation. because there are quite a lot of funds were there, especially the PSUs were there are giving like so much grants. So for the product development, even we also received one of the grant from Project Angur by Bharat Petroleum. So such fund is lacking right now because their priority has changed to something different. So right now the health sector or to assist this pandemic situation. And there are some other R&D funds are there, but comparatively. So if we compare the last year's or last year's fund and current R&D support from the government and from the CSR or from the PSUs, it is comparatively very less.
Okay, thank you. So we're running a poll at the moment, and we have had about 86% have voted. And the question, which we're, the key question, does the corona lockdown spell the end of India's valuation-driven startup boom? And about 40% of people are saying it's too early to say. Arbinder, I want to bring you in, and I would like to know your views generally on, do you feel that, speaking to your clients, etc., one, is it fair to call it valuations driven? And do you feel that this will spell the end? And perhaps there will be more of a focus on profitability going forward?
Yeah, I think if I answer the poll from my perspective, I think it's too early to say. Putting all of this into kind of perspective, we are talking about 5 weeks post this kind of period where we are, and I wouldn't call it evaluations kind of driven piece on there. Ultimately, I would echo a lot of what Vatsal said earlier. For me, I think what this will do is you will have to look at a lot of the resilience in terms of what are some of the non-essentials to kind of be taken out of this to kind of really factor in what will come out from a valuation perspective. So, the kind of forecast which we're seeing from businesses, so we know where they are taking out some of that, non-core costs. And that's where I kind of come back to, for me, is on that R&D piece. That's really, really key here. So, continue to invest in that. And if I could just kind of, I know it's going on a slight tangent here, but I think what will help those valuations continue is that support that will be made available for those businesses, in the R&D piece. So if we look at the UK market, where there's always been some really strong R&D tax breaks, government grants available. There's been a package of measures which kind of come in the UK, who's going to help those start up to scale up businesses. I think it's how quickly some of those Indian initiatives will come in there, because from my perspective, the R&D piece has always been slightly lagging in India in terms of the some of the breaks that have come in there. So I think a combination of that will really help to see which of those are really factoring in the valuation side.
Okay, thank you. I've had just another question in from Akash Shah. So what happens to unicorns, especially in food and hyperlocal domain, who are millions or billions of dollar valuation, but due to the pandemic, they've lost the traction and also habit loop of consumption is no more than the factor of the valuation. Moreover, they're still burning in cash for operations. What is your take up on such startups? Arbinder, do you have any views before I ask the other panelists?
Yes, I think those valuations that have come in, pre this period, it's how they can sustain their cash in this period of lockdown. How can they, sustain their cash on that side to come out, successfully on the other piece out here? I think it's too early to say whether there will be a correction or whether there'll be a massive downward kind of piece on their valuation on the back of this.
Okay. Sorry, who was that? Sorry.
Yeah, I mean, I'm happy to come in. I have
Go on, Vatsal. Yeah, please.
So two things. One, the question presupposes the over relevance of tier one as a market. What we're seeing now more and more is that food delivery and hyperlocal deliveries will be the next growth market, will be tier 2 and tier 3 cities in India. Mm-hmm. And we're already seeing Zomato and Swiggy and even the smaller ones and newer startups pivot into supplying groceries, food, etc. to the smaller towns and villages. So the real growth story of India will happen when tier 2, tier 3 cities and villages and towns will get access to a larger delivery system. So I think that to the extent that there's going to be a focus on those markets, because even the lockdown is going to end first in relation to tier 2, tier 3 cities. As far as valuation directly going to be impacted, I don't think so, because typically any new round of valuation is at least pegged against the previous one. So it's not going to be, it's not a material adverse effect situation which just trumps everything. I think it's a matter of wait and watch. The only thing they're focusing on right now is, of course, there's no discounts anymore. I think the Ken covers an article on this coincidentally just today or maybe yesterday. So I would encourage the reader who asked this question to go through that Ken article. It does do a deep dive on this. And the other thing that we're seeing is that a lot of the race for market, which is definitely just it is the startup story, right? We're not an IRR based PE investor sitting in startups. You have investors who are in there for the long haul. So I don't think direct impact to valuations, but yes, there might be a change in business. And the same goes for businesses which are looking at vernacular content and vernacular outreach. Anything which has a vernacular play is likely to see a growth now. So I have advised recently a funding deal of a startup. I can mention that, I won't mention the name, but the company in question is raising around as we speak, because it's focusing on the tier 2, tier 3 market. So I don't know if that answers, but I feel that there will be some changes in terms of how those businesses will play out.
Dr. Singh, did you have any views on this as well?
Yeah, I have a couple of views, and also on the earlier question where the funding issue was coming up.
Yeah.
I wanted to just flag the fact, the same thing that Rashid was also mentioning, that it's always safer to go in for more traditional forms of funding.
Mm-hmm.
How is this happening? If you look at the UK or if you look at the US, you see that funding is being given, special funding has been made available for small and medium sector. Now, startups come within the small and medium sector. It's not that they've been singled out as startups, but they've been singled out as a small and medium. And say in the US, for example, you're getting funding at 0.5% as opposed to 4% in the market. So obviously, a lot of people are going to shift their funding to this. Same thing in the UK, same thing in India, where there is a greater propensity to go for safer forms of funding, which is obviously at a lower interest rate. And this is going to actually happen, and you'll see more of this beginning to happen post-COVID in this entire situation. It's again on the valuation point, which many people, experts have already given their views on. I'll only mention this much. I'll only mention that when I spoke about research and development, I talked about the changing model, not just for startups, but for the world as a whole, where the research and development had turned to search and development. And what did search and development mean? It meant that you went for M&A and the search part, or you went for partnerships in the search part, where you got technology which was not otherwise available to you to do the same thing in-house. So you were saving your own money, you were doing a search and picking it up from outside. I think more of that is going to happen, and more of that happening means a greater chance for startups to actually be in that space of providing technologies and solutions which are not otherwise available. And finally, there was another question that was raised by one of your participants in terms of whether more resilience is required in the future. Of course, resilience is required in the future, but that's nothing new with COVID. It was always there. You had to have a resilient market, because if you had to be sustainable, the first part of being sustainable is to have a sustainable business. It's only after that that you look at the sustainability of the world and look into that aspect of it. But if you did not have a sustainable business model yourself, you were not going to be there for very, very long in any case. So I believe that it's something that COVID has made us focus more on, but it's very much there for always in business.
Okay, thank you. I'd like to get closing remarks from each of the panelists. So, Dr. Singh, positive outlook, glass half full in your view going forward?
Yeah, I think it's a glass half full, but it's a glass half full that's getting filled up pretty quickly. And I hope it'll get filled up pretty quickly, because we are going to find a solution to this whole COVID issue. We can't let it go on. I mean, the whole world is looking at this, like you must have heard, like even in New York, just like you had for the atom bomb, you know, a large number of scientists coming together and working on a solution. You have similar solutions coming up for handling this pandemic. And you've heard about how in Pune, our wonderful lab there is working on a solution which will obviously give you some kind of vaccine within 6 months, when actually it should be 6 years. So there is a lot of work happening, and I'm sure that we will all be out of it pretty soon. And well, it will be back to business as usual, hopefully. Thank you.
Thank you. Rashid, your views, just to close off, are you positive? I mean, clearly, your business and the way it operates will still have a lot of work, but are you generally positive for the startup space generally going forward?
Yeah, so basically after this lockdown or after this pandemic situation also, all the startups ecosystem will take up, and some of the startups right now are struggling to move forward. But even though, what I thought is like, those startups who are just, I mean, overcome this situation have a great future after this pandemic situation. So that's what I thought. Yeah.
Thank you. Vatsal, your closing remarks?
Sure. Firstly, thanks for moderating this really well, Chirag.
Thank
really
you.
appreciate that. I think 2-3 things. One is that, you know, there's this while there's a growth story, I think the consumer market in India, if you look at the net consumers, it's still not very high in terms of volume. So unlike a lot of developed countries which are over leveraged, and therefore there's a lot of credit in the system, again, because of our protectionist regime, we're not there yet, right? And which is great because I think we can't control a financial pandemic, and therefore the government does take measures which are very slow, especially in terms of releasing credit. Banks till date, and you know, I'm directly in touch with very senior people in most banks that operate in India. They're still saying that we're scared to lend, right? Despite these announcements by the government. I think when the mindset changes to be more inclusive and say, what is it that proactively policy can do to enable actual deployment of cash? Because the more you deploy cash to SMEs, which is still 60% of our workforce, right? It's not startups. As long as we can't get that right, there's no, what is a consumer going to buy, right? And any startup to grow, if you look at profitability, needs consumers like Mr. Didar Singh, me, and you know, Rashid and Arbinder, and you buying goods and services. So I think when we switch the pivot to ourselves and say, how do we feel right now? Do we feel like buying anything? Do we feel like selling anything? The answer is no. So we're not detached from the startup community to that extent. Having said that, I do hope that regulations will continue to get eased. At our end, we will continue to do what we can to push the government to take a favorable stance towards Indian businesses. Positives, yes. As I said, gaming, tech, core SaaS products, it is the great time to have the new Freshworks or the new Zoho in India.
Yeah.
It's a great time to have SaaS focus, which we lost, but to get that back. We're also hopeful that a lot of manufacturing companies which are leaving China, India would be able to attract and not lose out to Vietnam and Philippines and Thailand. On a macro level, these are some considerations. And of course, on a micro level, we continue to do the work. And, you know, I just want to also mention some of the good things that have been happening during this time, some of which I'm part of, luckily. So during this pandemic, a lot of VC funds which are operating in India have set up grants. You might know about the ACT grant. And so there's also that inclusivity that's happening. And I feel if you know, just I think last year, Time and had carried an article on how businesses are going to be more socially responsible. There was this pact that was made by the top 200 leaders of the world saying we're going to shift to consciousness in business. So I feel this is also a start of a new age and a new era of conscious businesses, sustainable businesses. And to that end, I wouldn't call it a correction. I would call it evolution. So here's to evolution. And I guess to that extent, let's wait and watch and hope for the best.
Cool. Thank you. Very nicely put. Arbinder, your closing remarks, you said your glass is half full. And so I'd like to know, clearly, hopefully you're optimistic and your views generally on the impact of COVID-19 on startups going forward and business generally.
Yeah, I still think an hour later it's still half full.
Good.
But I think we have to be realistic with where we are as well. And I think things are going to get worse before they get better, in my personal view. Seeing forecasts, seeing businesses, talking to, particularly my clients out there. And I think, we're going to have a very tough, end to 2020. But then the bounce back is going to come back even stronger in 2021 in Q1. So I think you've got to forecast for the worst. So I think my key takeaways would be companies to really manage their cash well. I think Vatsal kind of touched on it very well, that access to cash, even though this, in India, I appreciate that. But even if you look at the UK, some of the initiatives that have come out, it's one thing having the initiatives, it's another thing having that cash available to the companies and having access to it. So I think that's going to be very important. I think I love the phrase there. It's not a correction, but evolution, and I would definitely concur with that. It's those who can have flexibility in their business models and who are going to adapt to what's going to be a new norm. And I think we are going to have a new norm here. So, a number of them are looking at their office spaces, some of those expensive costs coming out, how they're hiring and the model and what that will look like. I've harped on about it already, but I'll say it again. The R&D piece and making sure that that is not taken out of budget is going to be really, really key. So I think, for me, it is half full. I think, by the nature, these startups have to manage their cash well anyway, but even more so in times like this. But I'm also confident that those who've got the right business models will flourish, when we come out of this. Because also and if we go back to Dr. Singh's opening kind of remarks, this is not market factors that have resulted in this crisis and the subsequent economic slowdown. So we will get significant growth coming at the end of it as well. So let's look at this half full as well, but let's not underestimate it. It's going to be an extremely tough 2020.
Thank you. I want to thank all my panelists for a very insightful, interesting and fascinating discussion. Dr. Didar Singh, Vatsal Gaur, Rashid Bin Abdulla and Arbinder Chatwal. I think it's safe to say that, despite the current situation, India has plenty of opportunity to further accelerate its startup and tech economy. India has a diversified economy that fosters innovation and talent. And no doubt with the ease of regulations, R&D, access to cash, hopefully, we'll come out of this positively. And clearly, it's good to see more focus on consciousness and sustainable business. Look, if Bridge India can help in any other way, please email contact@bridgeindia.org.uk, especially if you have suggestions for other webinars. Otherwise, thank you so much all for your time. As mentioned before, this has been recorded and so will be, I'm assuming, available on the website, but we'll publish it on social media as well. Thank you, guys. Thanks, everyone.
Thank you, Chirag, and thank you, Bridge India, for this great initiative.
Thank you. Yeah.